Hey, Mike, today I want to talk about Coca-Cola because Coca-Cola had one of the best days ever, I think, in about a year. It was up 6%, but here's what's most notable. It has hit a new 6-month high, so that means there's definitely some room to run on Coca-Cola. I said in a previous video, I don't know how long this rotation into value stocks is going to play out. I think maybe this just might be a 1 week or 2 week thing. However, I do think Coca-Cola does have a chance to go on a little bit of a run. If you're looking for a safer stock that pays a nice dividend of 3.12%, Coca-Cola, one of the best, most recognizable brands in the world. I think one of the reasons why I could run is like it's done really not much for the past 5 years. It did have a run up in 2019, but then with the March 2020 crash, it lost a huge amount. So I do think it's going to work its way back up and get back up to this pre-crash high, which is $60. It's really only about 15% away. So I think it could. I could definitely think Coca-Cola can get back up to the $60 level within the next 6 months. So if you are looking for a safe stock that could give you some outperformance and pay a dividend, the dividend is 3.12%. I think Coca-Cola is the way to go. And also, if you want to hold Coca-Cola long term, Coca-Cola has had 58 straight years of raising its dividend. Last year, it raised its dividend by 2.5%. So if you are looking for something long term, the good thing about a stock like Coca-Cola, even though Coca-Cola doesn't move much, is that you can get paid from your stock, whatever having to sell your stock. And sometimes if you have like a huge portfolio, if you have like a multi-million-dollar portfolio, you probably don't want to be buying and selling too much because of the capital gains implications, especially short-term capital gains implications. So if you have a lot of money, if you have a multi-million-dollar portfolio, it's great to have a portfolio that pays maybe a 3%, and then just you're able to pull 3% in cash every, you get 3% of your portfolio every year. While maybe your portfolio, since it's a dividend paying stock, it doesn't move up 9% a year like the S&P, but maybe you get 5 to 6% average gains. And that's a pretty good strategy to go. But I really like Coca-Cola at this point. I do think one of the threats that Coca-Cola had was were beginning to have some aversion to sugar and move away, and also aversion to diet soda products because those have aspartame, and people are learning about the health implications of aspartame. So I think Coca-Cola had a lot of those problems. I know they've diversified into water products. I think they'll figure that out. I mean, Coca-Cola is a huge company. They have more market experience in drinks than anybody else on the planet. So I think they'll be able to diversify their portfolio enough to have more than just sugar products and artificial sweetener products. So definitely take a look at Coca-Cola if you're looking at a value play. So I hope you enjoyed this video. If you did, be sure to like the video and go ahead and subscribe, turn on notifications. I do multiple daily updates each day on all types of stocks, from penny stocks to EV stocks, value stocks, and innovative stocks and all that fun stuff. I also talk about options and option trading strategies. Okay, thanks a lot. Bye.